Good morning, and it's another beautiful day here where we need to break down the markets. What a beautiful day, another dollar, another day to break down the markets, another day to make some more money, another day to keep going. So let's go, let's get it. So let's first start by looking at the article for today. And if you do not know, we have an academy, which is Omni Academy, which we break down these things for you and also make you understand. So we're going to look at today's article, which I wrote myself and I posted here today for all of you. And it's talking mostly about gold prices and how we are seeing a surge back above the 4660 prices as Trump is imposing tariffs on the Europeans. And just to read a quick overview here, gold prices climbed more than 1% on Monday to break above 4660 per ounce, hitting fresh records as investors turned aggressively towards safe haven assets in response to a major escalation in US-Europe trade tensions. This move came after the US president announced new tariffs on multiple European countries tied to this highly controversial effort to gain control of Greenland, a standoff that has rattled markets and widened geopolitical uncertainty. So we see gold here is hitting fresh new all-time highs, and gold has just been a monster. If you try to short gold here anytime soon, then you must be singing songs that are never to be spoken ever again. Some folk songs, some folklore, because you're getting wiped out like it is a fiction story. So we also can continue here. On Saturday, Trump declared that starting Friday, 1st of February, so once 1st of February hits and Greenland does not belong to the US, as he said, he wants a full-on buyout. So once there is no a full-on buyout by 1st of February, then he's going to impose tariffs on the following countries. So that those countries are Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland. So unless those countries agree to his demand of what he called the complete total purchase of Greenland, the planned tariff will rise to 25% on June 1st if a deal is not reached. So we can see Trump is continuing with his own tariff saga here, and the marketers are continuing to being volatile and reacting very strongly to this news each and every day. Remember, this news came in on Saturday, so we see huge gaps in the market. As we're going to look at the charts very shortly here, we will see huge gaps in the market because people received this news during the weekend, so there's no way they could react. So you can see that this tariff announcement has triggered asset repricing of risk assets. So we see people moving away from markets like the dollar. We also see people moving away from assets like Bitcoin. We see more people moving away from assets like the equities. So the Nasdaq, we saw a huge drop in Nasdaq. In fact, Nasdaq opened with a huge gap, as we're going to see here shortly. So we also see that there is a monetary policy angle because with tariffs, there's a risk of inflation, and perhaps we might see those rates going higher for longer. Or, on another case, higher gold yields will build into real yields dynamics that central banks watch closely. So rising geopolitical risk and softer risk sentiment tend to weigh on growth expectations and put downward pressure on long-term yields, which can make zero-yielding uncertainty broadens assets like gold are comparatively more attractive here. So if risk premiums remain elevated and economic uncertainty broadens, then central banks, especially the Fed, may find themselves under renewed pressure to maintain accommodative stances or consider rate cuts sooner than previously thought. So we might see these things happen here not so long from now. So we have already seen the market react to some of these changes. So if we can go and talk about something else here before we get into the technicals, let us first break down what we expect for this week. So coming on Monday, if you trade the Canadian dollar, then you should expect the CPI month over month. And we see here we are expecting deflationary numbers because remember, sub zero or negative numbers are deflationary, because the CPI is basically just inflation numbers. So we see here CPI month over month is expected to come at 0.4% or negative 0.4% rather. So the previous number was 0.1%, which is very low. And remember, the velocity of money needs to be balanced. So we don't need the velocity to be quick, and we don't need the velocity to be too small. So we need just the correct balance for the CPI, for everything to be correct. And something else here, we look at the GBP climate count change coming on Tuesday, the 20th. So the GBP, we're expecting, remember the climate count change is just the jobs data. So the jobs data is going to come here, and also we're going to see Governor Bailey speak. So that is what I expect on Monday and Tuesday. So not yet have we received any dollar news for those 2 days, and we not expect any dollar news until Wednesday now, which is Wednesday the 21st, where we'll get CPI year over year coming in, hopefully at 3.3%. So we are expecting the CPI for the pound to be on a rise. And remember, the pound is expecting only like 2 rate cuts come this year. So only 2 rate cuts are in the forecast as of now. And those rates are way too high. So are we going to see those rates come a little bit lower? Remember, we have the rates are at around 3.75% as of now, and we're expecting to end the year with the rates at 3.25. So 50 basis point cuts for the year. So those are 2 basis point, two cuts over 2 meetings, perhaps, because we don't see them cutting by 50 anytime soon with this inflation on the rise. Something very important as well, we're going to get Donald Trump speaking. And remember, with all these things going on, his news about the tariffs, we also see the Venezuela thing has not yet ended. There's no real conclusion. We also see something else here. Which is also making the market to go berserk, which is the fact that people have a little bit of curiosity on who Trump is going to nominate, or nominate for the next Fed chair position once Powell steps down as the Fed chair come March here, because his term is coming to an end, and he's not going to have any new bid at the position. So we expect some of these things to move the market a little bit, and so that is something also to watch for. At 4:30 p.m. Nairobi time, Trump is going to speak, and we might hear those questions be posed to him, and however he answers will determine the next moves, and especially if you have any dollar denominated pairs or dollar base pairs. So coming on Thursday, we have AUD. We remember the Aussie. We have a little bit of shakiness in the Aussie here, but we're expecting the unemployment rate to tick higher. We're also expecting the employment change to be positive, which means more jobs coming in the market, which is contradictory with the forecast of unemployment going up. So that is something to watch out for. So remember, the employment change here was negative for the past. So we had 21.3k people losing their jobs on Thursday. On the previous employment change, which is released monthly here, if I am not wrong. So another thing to expect on Thursday is the core PCE price index. So the core PCE price index is coming. Is also just inflation for the dollar, and finally we get the final GDP for the quarter here on the dollar, which is expected to come in as the previous number of 4.3%. So no contraction, no expansion here for the GDP for the quarter. And for the NZD CPI quarter over quarter, we are seeing that the expectations are for it to drop by 0.5%. So the previous number was 1%, and we're expecting here, as forecasts are suggesting, that we're going to get 0.5%. So if we get anything lower than that, then there is a very high prospect of getting further rate cuts from the Reserve Bank of New Zealand. And even further, the narrative of shorting the NZD as we have been looking for. And something very important also is happening on Friday, because we get the BOJ policy rate, which is expected to be held at 0.5%. So remember, the Bank of Japan has been hiking rates here of late. And if we can go and look at the forecasts for the year for Japan, we see that for the Japan upper bound, we see they're expecting at least one. Yeah, we're expecting only one rate hike this year. And that is expected to be in the last quarter thereabout. So we are not expecting anything to come in here until then the next quarter for the Japanese yen, which we are expecting to see one rate hike only at the end of what we call Q4. So that's why it makes a lot of sense as to why these numbers here perhaps may not move the yen a lot, because we're expecting the Bank of Japan to just hold those rates. Another thing we also get is the monetary policy statement. So perhaps we'll get the forward guidance from the Japanese yen, or the Bank of Japan rather, as to what we expect to see coming in here, continuing the days to come. So on Friday is a busy day because we also have retail sales from the pound, which are expected to remain at 0.0%. And remember, the retail sales from the previous number came in at negative 0.1%. So that was a huge change, because we were at negative prices and now we're going back to neutral prices. We're also getting the Euro German flash PMI and the flash manufacturing PMI. And if you know anything about PMI numbers, you know that for PMI, anything that is below 50 is a contraction, and anything above 50 is an expansion. And if we see here for the euro, we're expecting all those contraction prices in the manufacturing sector, which is something to look out for. So the manufacturing sector, even though they're expecting something better than the previous one, it is still expected to come in here at a contraction. And same for the flash services PMI, which is expected to come at an expansion of 52.5 from the previous 52.7. So we're expecting these two sectors to perform slightly better than the previous one. And looking lastly here before we go to the charts and see what we have, we see the pound also. We're expecting the PMI numbers, and we see the pound, unlike the euro, has a expectation of positive numbers as we had last time. Remember last time for the pound, I think we had expectations for sub 50 numbers here for the manufacturing sector, especially because it has not been doing so well, but we got surprised. So we got a surprise number and we got something above expectation. Looking at something else here, let's look at the flash manufacturing PMI, which is the last news we'll get, which is the major news, and it is coming on Friday, and this is for the dollar. So we are getting a lot of PMI numbers here for all these pairs. So that will be the last thing for the week, where we'll get the flash manufacturing PMI. And for the dollar, it is a very interesting one, because we see the services PMI, or the services sector, has been carrying the US economy. So all these banking industries, all these social media companies are the ones that are carrying the sector for the United States. So that is that for the news that we're expecting. So let us just break down a little bit of things here on a more fundamental perspective, and then we can jump into technicals. So for the news, we saw that gold hit new record highs on Trump's new tariff threat, which is say that is going to impose tariffs on a few of the countries, and we have named those countries as we have looked at in our articles, which we publish each and every day for you here. So you can go check them out if you are interested at omnimarkets.academy. So we saw here that gold broke above 46.60 per ounce, and we are seeing the bullion, which is all the precious metals, so gold, silver, and other metals as well, are experiencing an upward trajectory here for this quarter, and perhaps this might be sustained in the coming quarters as well. So Trump said he is going to impose a 10% tariff on the following countries. So we have Denmark, Norway, Sweden, France, Germany, UK, Netherlands, and Finland. So unless those countries agree to demand, which wants a total purchase of Greenland, then we might see those tariffs of 10%. And if they do not reach agreement also by the 25th of June, then we might see a 25%, or rather June 1st, we might see a 25% tariff. So he's going to raise those tariffs up by 15%. So let us look at some technicals here. Let us start with something. Let's go with commodities. So for the commodities, we saw a huge jump, and we see these gaps. So we are in the 4-hour time frame here, and we see these huge gaps forming on each and every pair here. So this one is silver, and silver has been on an interesting path this past year. We saw silver go up to so at first we thought silver was going to see some rejections around the $50 level, but silver broke through those levels without any suggestion of stopping, and we saw an insane bull rush to the upside here on silver. And are we expecting to see even more bullishness on other pairs here? For example, gold. Will we see gold also push to the upside? I guess that is something that we need to wait and see. It's a wait and see approach. So another thing also here, let's look at gold. Gold is just looking the same as silver, but remember gold is more reacting on this safe haven demand rather than silver, which has a lot of things driving it, because we have silver as an industrial metal. Silver is used to manufacture things like solar panels and other electronics. So we have demand coming from different sides on silver, and that is why it is the best performing commodity at the moment, followed by, I think, platinum. So silver is up around 170% for the year, which is insane. Another thing to look at is oil. So we saw a huge surge in oil here after the United States captured President Maduro, who is the president of Venezuela. And if you know anything about Venezuela, you know that they are a member of the OPEC, which is the Organization of the Petroleum Exporting Countries. And the OPEC is in charge of setting those prices for oil, because they export more oil than any other countries combined. So this was a challenge on oil, because if they are capturing the president of Venezuela, and if there are supply shocks on the oil that was coming from Venezuela, then we might have expected to see the supply on oil go down. And if you know anything about supply and demand, especially knowing that the largest demand for oil comes from China, who are the largest exporters, and they export to US as well, then we might have seen inflation numbers go on the rise. So here on oil, are we going to see a continual rising in the price of oil with all this Venezuela thingy going on? Or is this finally another way for oil to keep going down? So we'll be looking at this area right here, and any sign of bullishness here, you might be taking those buys to the upside to come and fill this zone right here. And remember, this is by no means any financial advice I am offering you. So you can also check Nasdaq here. So Nasdaq is an interesting one, because we are seeing people migrate away from the technology sector for just a short period of time. And this is mostly brought about by the fact that we see all this uncertainty. And remember, this risk on assets, such as the tech stocks and all other stocks, or the equities in general, they do not love us an environment which is not safe. So people would rather move away from this and go into other things that are less risky. So another thing to keep your eye on is the dollar. So the dollar, on the aspect of dollar, it's a very interesting one, because we have the new Fed chair perhaps being coming in here at March. Who is it going to be? So Trump initially hinted that he might leave Kevin Hassett in the media industry, that he does not want to put Kevin Hassett as the new Fed chair. And remember, the market was heavily pricing in the fact that Kevin Hassett might be the next Fed chair. So that's why we saw a huge dump here on Friday after Trump made those remarks that he is not going to perhaps appoint Kevin Hassett as the new Fed chair. And as people are expecting, Kevin Hassett is a huge dove, which people want at the moment. And the market has been heavily pricing it in, as we expect to get more than 2 rate cuts, or 2 at least rate cuts this year. But if we get someone who is a little bit more hawkish, which is unlikely because Trump wants those rates lower. And for now, Powell is sticking with the narrative of higher for longer, especially as he's looking at the data coming in. That's why there's numbers that will come in here for the CPI and other numbers are very important, especially the job sector. If we see another good sign in the job sector, then we might get those rates staying higher for longer indeed. Looking at the SPY or the SPX, we see it is just trailing somewhere there at all-time highs, which is insane to think about. So the broader S&P 500 is still very high and somewhere near all-time highs. The US 30, however, is facing a little bit of difficulties. So the Dow is also somewhere near all-time highs, but not quite there really. Same as the DAX, which we saw a small dump here after the tariff news was expected. So will people be buying the dips here, perhaps at the 24,600 levels, which is a psychological level, or will people keep on selling and we might see a little bit of a bearish momentum coming here for a while? I think we have to sit and wait for more numbers, for more clarification. As we also look at something here which is very, very interesting, as the Euro GBP is continuing this downside trend, which is hard for a while. We have had this downward trend since around November last year, 2025, and we are seeing it hold throughout the year, which is very, very interesting. So another thing to keep your eye on is the dollar Canadian. Remember, the Canadian dollar is a commodity currency. So with oil prices going to the downside, we expect the Canadian dollar also to weaken. But if we see a resurgence in the price of oil, then we might see the Canadian dollar get those gains and enjoy those gains, and perhaps even rally here. And we might see the dollar Canadian perhaps go higher than we expect here from our predictions as well. Looking at the dollar Swiss, the Swiss is at its weakest it has ever been. We see the rates are down to like 0.0%, which is basically nothing. So you're getting nothing for putting your money in those savings accounts, which is very insane to think about. So it is the weakest it can ever be, and which means that the dollar might continue seeing or gaining strength against the Swiss here for a while longer, unless if we get some geopolitical tensions, which might lead people to look for safe haven currencies, and the Swiss is one of the best safe haven currencies we have here. So perhaps a move to the upside here. If we get a bullish candle here, then we might see price coming to fill this zone right here, and perhaps we might be interested in those trades in the coming few days. Looking at the dollar yen as well, so the dollar yen is an interesting pair here as well, because the yen, which is on in between raising and holding rates, is expected to have stronger value or more value for the money than the dollar. But since the dollar, we are not so sure about if we are getting the rate cuts or not, we see the dollar strength holding here for longer. So if we get clarity on if we are going to get those rate cuts, then perhaps we might see a move to the downside for dollar yen. But if you look at the Fed watch right now, you can see that there is virtually no chance that the Fed is going to cut those rates in their next meeting. And that is why perhaps we are seeing those predictions still very strong for the USD here. So if you can get this to refresh here very fast, and then you can see that the probability here, once it loads, you'll see that the probability is at around 95% a hold as expected. Or rather, we also see that the probability for us getting a rate cut is close to none, because we are right around the 5% chance that we get a rate cut here in the next meeting, which is very soon. If I can just check, it is 9 days away. So 9 days from now, we're going to get the next Federal Reserve meeting, and we'll see what will happen to these rates. Looking at something else here, so let's go back here. So Euro USD is an interesting one as well. So are we going to see those sustained downward pressure to continue here to the downside? That we'll have to sit, wait, and see what will going to happen here with the Euro USD. So if we get an interesting candle here, perhaps a good bearish indication here with volume, then we might be interested in getting some sells to the downside to fill this range here for Euro USD. And the same for the euro, for the GBP USD as well, which we wanted to get entries but we missed, and perhaps these are chances for us to get those entries after all. So it's something that we might consider doing here. Looking at the pound yen, so the pound yen is another interesting one, because for the pound yen we see something happening here, that finally we are going below the 50 period moving average here on the 4-hour after a sustained long-term bullish pump to the upside. So if you can draw a quick trend line here, then perhaps we might get to see even things clearer here for the pound yen. So for the pound yen also, this downward pressure might not be sustained for longer. For NZD-USD, we see these bullish gains we got from the weekend are holding here, and is this trade going to be, let's say, invalidated? Because we see that for the NZD we do not get anything, or we did not get anything to prove otherwise that we are going to get anything apart from the bearish momentum. But as the technicals are suggesting, then are we going to expect a little bit of downside here from the NZD-USD, or is that perhaps not to be expected? For the Aussie dollar, again, we see those entries holding here, and perhaps we might see Aussie dollar remain up a little bit from the downside. So now getting to the crypto market is a very interesting one, because we see Ethereum here and Bitcoin losing some of the gains they got in the past week after that news came in. Remember, Bitcoin thrives in a risk-off environment, or in a risk-on environment rather. So when we are in a risk-on environment, we see equities, we see Bitcoin, and we see other risk-on pairs doing extremely well, which Bitcoin had started, and we hit even highs of like 97, 98K thereabout. And now, will we see Bitcoin drop all the way back down to 78K, which is a very huge possibility? Or is this just a small upset? Then we might see a breakout and then a continuation all the way up to 188K level. That is something we have to sit and wait and see. So also, as we finish here, Nvidia is trading somewhere near its all-time highs, so not there quite yet. We are at around $186 a share level, and their earnings are coming here very soon on the date Wednesday, 25th February 2026, where we'll get earnings from Nvidia, and this is for the period ending January 2026. So these are essentially the Q4 numbers for Nvidia. So they're estimated to come in at around $65.45 billion here, and that is a huge surge to the upside. And something else we might consider as well is Tesla. So Tesla, we saw this trade here in Tesla. Tesla hit all-time highs, not really all-time highs here, but the highs that we saw from January 2025 thereabout. And it's a very interesting thing here from Tesla, because we see this trade, we caught this trade, and even though we missed the exact entry which we wanted, because we wanted it at around these levels here, but we still managed to catch these trades here on Tesla. And it has been an insane hold, because we had a little bit of tariff sagas here and there, and finally we see that Tesla hit all the way to the 486 level, which is at around the market price that we wanted to take those profits. And these are some of the trades that we are looking at here for this coming week. And if I can just look at something else here before we finish, let's look at the forecasts for some of these pairs, especially the FX. So let's look at the Euro USD. So we see the Q1 focus is around 1.18, and right now Euro USD is at around let us see how much is Euro USD at 1.16. So we're expecting to see bullish momentum. According to forecasts, we're expecting bullish momentum for Euro USD. Are we going to get them? Perhaps not, especially with these new things coming into the market like the tariffs. So that is a wait and see approach for Euro USD. And we have all these other ones as well, which we might break down in our next stream, perhaps, because we're about to close this one here, and we might be back again another time. And remember, if you haven't, make sure you go and read our articles at omnimarkets.academy, where we post you daily breakdowns on what the market is doing, the fundamental analysis, and what is going on. Something you need to watch out for. Make sure you check it all out there, and you might understand a thing or two here, especially with what we are talking about, so that you know exactly why we are saying what we are saying, why we are looking at the market the way we are looking at it, and why we are breaking it down the way we are. So you can do that, and perhaps this might be it if there are no questions. So are there any questions here before we leave? Are there any questions here before we leave? Any questions here before we leave? Remember, the only bad question is the one that is not asked. Any question before we leave? You should ask the questions now or forever hold your peace. So any questions here? Any questions? I'm guessing there are none. I'm guessing there are no questions. So I think we'll end the stream there. Just remember to watch out for the market news and watch out. And if you haven't subscribed yet, make sure you do so, because we are going to be going live way more frequently here and give you a breakdown of what is happening each and every day. And that is it for me. That is it from our side. All I say is thank you for joining us, and I'll see you next time. So thank you and goodbye. But until next time, let us meet when we can't avoid. Adios.